But the other thing that I'm going to hit on also is that we talk a lot about, right now we're talking about money management in the developed world for relatively wealthy people. And I think the thing that Robos are going to do that's going to be very unique is they're going to allow people in developing countries to invest. They're going to be asset holders now. And there's a lot of up-and-coming peoples in places like the Philippines, in Malaysia, Thailand, and they have money to invest, but where in the smaller villages where they reside, there's no bank, there's no money manager, there's no life insurance sales, and there's no place for them to save money for their kids' educations. And the robo platforms are going to give these people the ability to invest in markets and gain assets that they never had before. That's just a whole...
And also more security, because they don't have to hold cash, they're not going to get robbed, all the other things that go with it. It's simply they can do a transfer or a trade directly onto the mobile phone. It's secure in the cloud, one hopes, and they're going to be safe.
And this is a big story, this is the codization of money, right? I mean, many people, look at what happened to the telecom companies, right? Yeah. Once Skype came, voice over Internet Protocol. Now it is increasingly more money over Internet Protocol.
Yes.
And that is also a significant game changer.
Yeah.
And what I've noticed so far, everybody talks about fintech. Still, in my humble opinion, sometimes they talk about fintech, but backward looking. Okay, we deal in United States dollars or Malaysian ringgit, right? When to some extent you should think about Ethereum versus Bitcoin or dark coin. And what I'm trying to say is that this sort of money over Internet Protocol potentially is one of the bigger game changers that people haven't really maybe considered enough.
And I think it's actually transformational because 3rd of March this year, Bitcoin's broke parity of gold. Right? Now, half the world doesn't know what Bitcoin is. The other half just kind of figure out different things about Bitcoin. But it's very important because once you cross the threshold, it's like graduation. You play into a different field. And there are now very serious people that we work with who are setting up funds to invest in trade Bitcoins because they see it as an asset class. Obviously, the Lincoln brothers basically setting up an ETF. Why would you set up an ETF to invest in the virtual currency? But it's one way where people could get exposure to the Bitcoin, and they've probably got nothing better to do after they updated Facebook. So this was the next big thing that they're doing. I'm not sure whether they'll get approval, but all this is paving the way, like you said. It is true also with Bitcoin, the other issue, not only because they have broke parity with gold, but because the current FX system is inefficient because everything has to be done through US dollars.
Yes.
Right. Now, we are now supporting a project that is looking at using Bitcoin to support trade, because a Singapore importer buying from an Indonesian do not have to go through a US dollar link. They could both move Bitcoin with each other and get local currency back again. And I think that's going to take up quite a bit of transaction because firstly there's no FX and then there's no payment.
And think about it this way, why is it that most people get paid on a monthly basis, right? Because in the old days the transfer was sometimes more expensive than the salary that was paid, right? But with all these cryptocurrencies, why not get paid by the second? And also hence what that means is we have less counterparty risk. So this whole idea is like what the Japanese talked about, just-in-time manufacturing. It will be just-in-time financial markets. So to your point also about portfolio analytics, giving somebody a statement that is showing valuation from a week ago, I think will increasingly become less likely, and increasingly people want to know what's your real risk in real time, and hence this whole cryptocurrency will sort of speed this up. And it might be a strange idea in the future to think like SWIFT. I mean, why did it take me 3 days to send the money and then...
And it was called SWIFT.
Yeah. No, I did take offense at that because I do used to work for SWIFT for 10 years. So
It was revolutionary when it was...
It was revolutionary because we replaced the telex. So we were the smart kid around the block, and we were technically the email among the banks. Authenticated email.
Authenticated emails.
But obviously, it's difficult to do transformation within the organization. So that's why I've moved on now as well.
Question: since you worked at SWIFT, is it that the banks today could be what the United States General Postmaster was?
Yes, it could
being
be.
supplanted by email.
I'm probably going to claim the Fifth Amendment on this, because you have to understand the banking system do ride on inefficiency. Fees are charged, and you are sitting on interest-free float. Obviously we're not in a high-interest regime, but it used to be the fact that Philippines was doing 14% per annum, and we sit on float for 7 days. A lot of float. It's very profitable. But it is true, as you begin to do quicker and faster transfer, there is nothing that the bank takes off you. Today, if I do a fast transfer to you, digitally, we don't technically pay money, but to do an international payment, we need to pay money because it costs you $20-30.
Final questions that we have here?
Yeah. I thought this was just the warm-up. You were recording it,
Is the future bright for private banking as services?
I think the real issue here is who's going to win on this. And it's the service is going to be there rather than the product. But who will be the winners in 5 years' time? And that's the one that nobody can really.
The end client.
The clients are going to win, but the institutions, which one of them will be? Which ones are you going to bet on, and which ones wouldn't you? And I think that's sort of that's going to be an interesting area to watch.
I'm not even sure about the clients, because you see today, if the banks really start to adopt fintech, a lot of why are the banks investing in the fintech? Are they investing to reduce their bottom lines, because there's finite amount of money? What you make, either you make or the client makes on a commission, right? So are you investing in it so that you make less, or are you investing that you get such a wealth of insights so that you know when on Thursday, on the last day of the month, that he's got zero and he will lose his mortgage or his house if he does not collect, and that's when he goes to the logs in. He said today's mortgage rate at 30%.
I think that's a very fascinating point. This whole discussion about the blockchain. Many people now say we adopt the blockchain, but we don't like Bitcoin.
Yeah.
There's a bit like in the mid-90s where people saying, look, that internet can't be trusted, we want an intranet, right?
Yeah.
So again, people who argue that they want the blockchain without the Bitcoin is saying that we just want to share database.
Yeah.
But that is fundamentally missing the point.
Yeah.
But I think that going as far as embracing Bitcoin would be an existential problem, because it might fundamentally disrupt their current business model. So it's not just about money, it's not just about intellect, it's about willingness to adoption, to adapt.
And I suppose the last word is, on top of that, beware as a buyer. It's a jungle out there, but